Guys, we've also got the start of the new financial year to talk about. And ultimately, the new tax regime is something that a lot of you will automatically gravitate towards because it's simply better. But what are the aspects to focus on? How much tax will you be saving? And what are the do's and don'ts heading into the new tax year? Here's a conversation that I had with a tax expert. Joining me on this show is Parizad Sirwalla, who is a partner and national head tax at KPMG in India. Thank you so much, Parizad, for taking the time, and pleasure speaking with you. Let's talk about how revolutionary this change in the tax regime has been, just to set the context.
Sure. So thank you for having me. And yes, we've just begun the new fiscal year, which is 1st April 25 and ended one of the earlier financial years, which is 24-25. The choice of personal tax regimes, as you mentioned, as we say, the old regime and the new regime does coexist, even for the year that just ended, which is March 25. But increasingly, if you see the announcements, even during the budget of Feb 1st that was announced, and going forward, it's the new tax regime, which seems to be the default personal tax regime. And just to give you, just to start with some bit of statistics as per officially published data of the government, for individual returns which were filed last July, that is July 24, apparently 72% of the taxpayers have already migrated to the new tax regime. So let's just take a look at what are some of the unique features of these old and new tax regime. And daunting as it sounds to understand, few and far there are some differences. So first of all, in terms of the slab rates and the tax rates, so we did have an old tax regime and a new tax regime even for the year ended March 25, and it's been made more liberal for the current fiscal year, which is 25-26. As we speak, the first slab rate, which does not attract taxes, is increased even from 3 lakhs to 4 lakhs, even under the new regime, with effect from 1st April 25. And there are roughly now, 7 slabs with different tax rates. Above income of 24 lakhs is now a rate of 3% is against about 15 lakhs, which was there up to March 25. So if I were to just compare the progressive rates of tax with the slabs, even vis-a-vis the new tax regime, which was existing as of March 25, definitely there has been, some amount of improvement. That's one change. If I look at the old personal tax regime, of course, for every individual taxpayer, it depends on his or her personal facts and circumstances, investments, deductions made, so on and so forth. But the slabs itself are different from the old tax regime. So as an example, under the old tax regime, up to 2.5 lakhs of income, there is no tax. The first slab in the revised new tax regime is now 4 lakhs. That's the first thing on the slab rates. The second thing is that, the higher standard deductions for salaried income taxpayers. So you have 75,000 rupees, which is available in the new tax regime as a standard deduction, as against 50,000, which is under the old regime. We may discuss it a little later during our conversation, but we've also heard a lot about the rebate that is available in the budget announcement. And now literally for total taxable income of up to 12 lakhs per annum, you don't land up paying any taxes by virtue of marginal relief, which is under the new tax regime. Again, the threshold of income is up to 12 lakhs, which is 5 lakhs of income only.
Let me come in and ask you about that, because I think a lot of people will be confused about this, Parizad. The rebate exists, and it existed in the old new tax regime, if we can call it that, and it has been raised to 12 lakhs. So this is a major benefit. A lot of people will not have to pay tax on account of that. Now, if you calculate the standard deduction of 75,000 as well, what that means is that if your income is 12.75 circa, or around that much, assuming that you have that standard deduction, it comes to 12 lakh, you won't pay tax because you get a rebate on that. But then if you do cross over with your net taxable income into say 12.1 lakh or 12.2 lakh, can you explain how that marginal relief works? Because my understanding is that if it crosses by 10,000 rupees, you would only have to pay 10,000 as tax. And that goes up to a certain level, right?
That's correct. So many people actually get this wrong in terms of the mathematics of calculating marginal relief. First of all, as a concept, what is marginal relief? It's a relief given to taxpayers only in certain circumstances to compensate for this incremental tax liability which arises when your taxable income is just marginally above the threshold. Now, this marginal relief or the rebate concept was always there under the domestic tax law. It's just that the threshold income at which it triggers has kept on changing. So under the old tax regime, it is still at 5 lakhs. Under the new tax regime, till March 25, it was 7 lakhs of income. Under the new tax regime, with effect from the fiscal year, which is the current year, from April 25 onwards, that threshold has gone up to 12 lakhs. Now, to your question, if you work out the maths, the way it's calculated is, if your taxable income annually is 12 lakh 10,000 rupees, your gross total tax liability roughly on that, including before cess and surcharge, amounts to roughly to the tune of 61,500. And then the way the marginal relief is prescribed or the rebate is prescribed, you literally land up getting, you subtract the 61,500 from the 51,500. So you literally land up paying only 10,000 as your taxable income. So the way the maths works is that your excess income over 12 lakhs, your tax liability on total income, and if that is greater, then your relief is basically the difference between the two. As complicated as it sounds, the numerical, working of it is roughly up to 12 lakh of 70,000 rupees, as you said, is the break even, where your incremental tax liability would be barely 10,000 rupees. Above that, of course, your normal tax triggers it.
Okay, so you've explained this very clearly. Now it comes to the point where I'm asking about deductions, because this is a reason why, Parizad, a lot of people chose the old tax regime in years past. But as you've pointed out, already last year, I think people, when they did the math, they were surprised to find that the new tax regime was actually beneficial. Even though they thought that with HRA, with certain other Section 80C, Section 80CCD, Section 80D, with all of these deductions put together, they thought that the old tax regime was better. Is there a threshold that you have calculated to say that if you have deductions of this value, then in this year, the old tax regime is still okay?
Yeah. So once again, to reiterate, the choice of both the regimes exists even today.
Yeah.
It's very individual. But to your point, what are some of the things that are not allowed in the new regime at all? So your big ticket items are your rent payments. So for those who are claiming rental HRA benefits, or if you have a loss from self-occupied house property, then that's not allowed under the new tax regime. And as you said, all your popular Chapter 6A deductions of ATC, etc., 150,000, those are no longer available. But yes, a rough and ready working of the break even to your question, and I have the numbers out here. If I do the break even for the current fiscal year, which is from 1st April 25 onwards, then on an annual income, and I'll give you some ranges, on an annual income of 16 lakh plus, only if your deductions as per your old regime, including standard deduction, is as high as 6.5 lakhs per annum. So if you're a person who's having deductions or exemptions 6.5 lakhs and above, only then will the old regime be beneficial to you. Otherwise, clearly you're more benefited if you move to the new tax regime because of the liberal slabs and the liberal tax rates there, and so on and so forth, depending on the threshold of income. I'll just give you of income. So if you're an annual income of 24 lakhs, then the comparison between the old and the new regime, again for this fiscal year, which is April 25, if you have deductions from literally 8 lakh plus, 8.3 lakhs plus per annum, which is a pretty high amount, only then will you benefit under the old regime. Otherwise, you're clearly better off under the new regime.
Yeah, and you'd have to be stubborn. You'd have to be stubborn to try and push those deductions, Parizad, all the way up to 8 lakh. It may be detrimental at that stage to try and still go to the old tax regime. Because really the advantage is in the new tax regime is giving you more money in your hands. But there are deductions still available in the new tax regime. I want to talk to you about one of them in particular, and that's the National Pension Scheme, which is available. Yeah. Can you explain that, and what are the limits in that deduction available?
Sure. So first of all, I just reiterate, Alex, that every individual's fact pattern is different. So yes, as a general rule, optically it does seem that the new tax regime is beneficial, but there are a few items like rent and other stuff that if you're claiming those deductions, your old regime will still be beneficial to you. Coming to the NPS, as you said, which is some of the key highlights. Of course, contributions are made to the new pension system. The employer, it is a scheme governed by the pension fund and regulatory body. It can be opted for on a voluntary basis by the employer and the employee. A retirement benefit avenue as well. And the eligibility is basically anyone who's in the age group of 18 to 70 years is eligible to contribute towards this scheme. Now, there is something called a Tier 1 account, which the employers contribute. And, the minimum pension amount is around some 100 rupees per month. And maximum can be, INR 500 per month is the minimum contribution. Now, a lot of it, withdrawals are also linked to the age demographics of the contributor. But just to give you the perspective on the tax benefits on this scheme, the employer contribution up to 10% of the basic salary is allowed as a deduction to this NPS. It's under the old regime, and if you're under the new regime, then employer contribution up to a higher amount of 14% to the NPS is allowed. Then 60% of the total corpus is received as lump sum at the time of exit. That is also exempt from income tax under the provisions of the domestic tax law. You can also get a partial withdrawal on completion of 3 years of up to 25% of the contribution amount. That is also exempt as per the provisions of the Income Tax Act. The employee contributions, there was an extra deduction of 50,000, which you get only if you're under the old regime, not under the regime.
One specific point that has occurred to me that I've also come across is that if you have a certain amount of money that you're paying as rent to your landlord or landlady, and if it is above a certain amount of money, can you be asked by a tax authority why you have not been collecting tax deducted at source? And what would you need to bear in mind from that respect?
So those are separate TDS provisions, I think you mean, that any payer of rent to a resident landlord has to deduct TDS above threshold rents of 50,000. So it's a compliance obligation that applies even to individual payers. And you cannot pay the gross rent to the landlord. You have to deduct the requisite taxes, deposit them into the government treasury. And there are compliance obligations and, forms that are required to be filled. So if you're paying rent, you have to take care of those obligations as well above a particular threshold. But those are separate TDS obligations under the law.
Just to follow up to that, because a lot of people, and Parizad, this is my last question, is that a lot of couples tend to pay rent as well, right? So if you're splitting your rent and if you're claiming your HRA benefits based on the half of the rent that you're paying, do you still have to do that TDS? For example, let me give you an example. If you're talking about 75,000 rupees, which is split equally, and so therefore you're not crossing that 50,000 rupee threshold individually, do you still have to calculate TDS?
So individual payer of, so it depends on how the agreement is also structured. So the rent payment for individual taxpayer above a particular threshold attracts TDS. And there are lots of others around this dual payments of rent, even from an HRA exemption perspective and a TDS perspective. But rent exceeding a particular threshold for an individual taxpayer attracts TDS withholding obligations.
Fantastic. Thanks so much for joining me, Parizad, this show. It's been an absolute pleasure speaking with you. All right, that brings us to the end of this edition of Your Money Matters. Thanks so much for watching. Do stay tuned. This is NDTV Profit.